Hey folks, welcome to the Market Huddle Plus episode where we get a previous guest back on the show for a quick update. I'm Kevin Muir, and this week I have the good fortune to chat with Horselover Fat, co-founder of Traderade. Thanks for coming back on the show, Horse.
Yeah, really happy to be here, Kev.
So you are Horse, the affectionately known as Horse, but you're actual Horselover Fat, is that correct?
Yeah, and I'm having to distinguish that more. I didn't realize when I got into sharing stuff on social media about trading that there already was another horse. I had no idea.
Oh.
So it's confusing to people now. There's a flow horse and then there's Horselover Fat. And, my name's derived from a completely different place. But yeah, there's two horses. So sorry for the confusion, everybody.
And so where does your name come from?
Huge dickhead, huge fan of Philip K. Dick, always have been my whole life.
You were saying you were a dickhead.
Well, I am a bit of that too, but no, it's an affectionate name for fans of Philip K. Dick's science fiction novels. And
okay.
Yeah, so it's a question I get quite a bit, but I was just a big fan as a kid, and that's the name he used for himself in his book Valis, which I think has like Greek roots for his actual name. Horselover and Fat is Philip Dick.
Okay. And so you were a co-founder of Traderade, and I was just having a laugh with you before we were taping the show because I was like, how do you pronounce it? I was trying to figure it out. And how do you spell it? And it's not Traderade like A-I-D, it's Traderade, A-D-E. And I didn't really get the origin of it. Why don't you tell us where it comes from?
Yeah, I mean, well, truthfully, I don't know that we put tons of thought into it, considering we didn't think it was going to blow up the way it has. And, I'm very thankful for that. We have a really awesome community. But yeah, the name is sort of, we were joking around with the concept of Gatorade, and really that's kind of what we built. We looked around as friends and just were like, okay, what are the things that we use to make intraday trading decisions or swing trading decisions? And we wanted to sort of make a place for ourselves to have all those things in one place. Because all of us there that run that group, we're actual traders, and we use certain types of data, which I'm sure we'll get into. And so that really was about is like, what are the things that aid us as a trader, which is where the name comes from. I know it's super cheesy.
No, it's a great name. It's a great name.
Easy to remember,
I'm just too stupid to figure it out on my own, so I needed some help. And I kind of just want to echo the comments that it is a great place. I go to Discord on there, and I lurk in there every now and then and have a look. And I must say, the community that's in there is so refreshing and so great, and it feels so much like an actual trading floor to me, because I get onto Twitter and it's all these guys who think they're just all that, and they're busy debating all these theoretical macro events that might or might not happen over the next decade, and proclaiming like they're genius. And then if anyone dares be on the other side of their trade, they're idiots. And not only that, they don't even seem like they're taking risks. They just seem like they're in a debating society, like a bunch of asshole debating societies. And what I like about your area is I go in there and it's traders taking risks that understand how hard trading is. I always say that Stanley Druckenmiller has figured out his winners and losers. It's 60% winners, 40% losers. Well, Stanley Druckenmiller gets 40% wrong. I'm no Stanley Druckenmiller, so I'm going to get a lot more wrong. So really dealing with your losers is so important. And one of the things I like to go into your group is that they have that kind of joking, kind of friendly mentality about their winners and losers, and they understand that this game is difficult, and yet they're also supportive of each other. And it's just terrific. And I kind of laugh because when I trade with my buddies, and like if I go buy something, instead of saying, what a genius I'm going to be, usually I make fun of myself and said, no, you guys better sell it because I just got long. And I go into your group and it's the exact same way. And it's great. It's so refreshing.
Well, I appreciate hearing that too, because it's really what we set out to do. And that's what we wanted. We wanted to there's so many trading and investing services out there. It's just a sea of them. We wanted to sort of be like the Discord, if that makes sense. Like just the opposite of all the garbage out there. Show people the real journey, what it's actually like to be a retail trader trying to navigate your way through the markets, piecing together data and opinions from all over the place. I mean, we all, like you said, the FinTwit reference, there's a million opinions out there. We really want to be able to separate signal from noise and just kind of show the process of like, this is why I'm making the decisions that I'm making. And I think that's the crux of what keeps it so non-toxic, is that losing with us is not necessarily something that anyone tries to hide. And that's one of the things that disgusted me the most about Twitter. It's like you have all these guys with 100,000 plus followers that make horrific market calls and then just delete their tweets and try to pretend like it never happened.
I have a rule. I never delete on anything on Twitter. This isn't Nom. There are rules.
Absolutely. I'm the same way. The only time I've deleted stuff, because I tell a lot of jokes, and if it was something that was super off color and offensive and people immediately start to complain, and they blow up my DMs, I'll delete that. But I don't delete market calls because I think it's just ridiculous. Losing is part of the game, right?
100%.
The thing is, can you make more than you lose over the long haul, and be very selective about your positions? And that's something that matters a lot to us. We've not spent a single dollar on advertising. And the funny thing is about our little community is we started it at the literal top of the bear market. Like it started on January 1st, not this year, but the year before. And it's like the fact that we've seen growth through the fact, through a bear market, like while the market is destroying people, to me, I think I'm just really proud of that.
Oh, that's great. You should be.
Wanted to have something where it's like, all right, this is the place for adults, not this toxic shilling crypto coins types of discords that are a dime a dozen. Right. We genuinely want to learn how to be better at doing this. And that's what I love about it. And honestly, I was skeptical. I was very skeptical because I don't like discords. I know their reputation. You know what I mean? Like I find advertising for that stuff to be very sleazy. A lot of people have these get rich scheme type, promises that, just follow this system and you'll be fine. And trading's not like that. We all know that. It's not like it. You got to take your shots where you see them. And I'm proud of what we built, and it's a cool place. And I love seeing you hanging out in there. Every once in a while, I'm like, oh, Kev is in here. That's cool. So it's really
great.
Awesome.
It's a great place. And it's more importantly, it's really a great bunch of people in there. And I highly recommend if anyone's sitting at home trading, a variety of different instruments, but if you're sitting at home trading and you just want to meet like-minded souls and talk about trading, it's the place to go. Okay, so let's get into let's get a little more specific. And we're not going to sit here and we're not going to say, what do you think the S&P is going to do for the next day or 2 days or a week? Because that's not really how you trade. You're a true trader in the kind of the truest sense of the word. You're probably going home flat a lot of days. And, if you do hold positions, they're not for long. And more importantly, they're based upon your trading feel or your indicators as opposed to your fundamental macro backdrop. So just for when we're talking about this, I want everyone to understand we're going to do a lot of talking about trading. We're going to do very little talking about, the macro setup. But one of the things
Thank God. Thank you, Kevin. Because I'm admittedly one of the worst macro traders I've ever seen.
Yes. Aren't we all?
I just can't do it. We talked about this last time I was on your show, is my wheelhouse is what's going to happen in the next 5 minutes to 30 minutes. Yeah. Beyond that, I have no idea. And I've just had to accept the fact that if I'm going to engage in financial markets, that's the area I need to specialize in. Just because I spent years trying to be a macro person and I'm horrific at it. So you gotta, it's part of sort of like same thing as cutting your losers early. Everyone talks about that in trading. Same thing when it comes to like your time frame approach, whether you're a swing trader, day trader. If one of those isn't working for you and your statistics back that up, ditch it. That's what I had to do with macro.
Well, some of it just hanging. You just haven't hung in there long enough. Like for me, it's been 30 years. I'm pretty sure I'm going to figure it out one of these days. Okay, so one of the things that I have a buddy that follows you very closely, and he sent me a note when I was asking, and I said that I was going to interview you, and he says, listen, one of the things that he is most impressed by is your ability to be patient and disciplined. Okay, so he commented that you'll sit in the weeds waiting, and then when it all lines up, you'll go and take the trade. Okay, first of all, did that take a lot to learn? Like, was that a function of overtrading, and then you came to the conclusion that this is something you have to change, or have you always been someone that's just been patient, and in fact you're the other way where you're forcing yourself to take trades more often and kind of forcing yourself to get more involved?
So first of all, it's a great question. Also, thanks to your buddy. That's very kind. I appreciate that. I think it's definitely something learned. I'm not going to pretend like I'm some natural born, super patient person. My family would tell you very much differently. But I think when it comes to the markets, overtrading, I think, is the number one killer for retail traders. There's sort of like this misnomer, the label day trader. For a lot of people, that means they have to place trades every day. It's in the name. And I strongly disagree with that. I don't think so at all. If the trade's not there, then it doesn't matter if you consider yourself a day trader or not. There's nothing to do if the trade's simply not there. The market doesn't really care about our timelines, our time frames. They don't, you know what I mean?
Yeah.
None of that kind of stuff makes sense.
So how many days do you not trade?
Well, our customers would probably be able to tell you better than I would at this point, to be honest, because I do get a lot of complaints about it. People are like, I showed up here and you're not doing anything. What the heck is this? But I do think it's a critical part to success, though. Like, overtrading is an absolute killer. And in my mind, just trading, I primarily trade the S&P futures. Most people know that by now, but I dabble in other markets as well. But let's take the S&P, for example. There's typically only one or two main quote unquote moves for the session,
Okay.
right? It's either a breakout play or the market is consolidating, you get a D-shaped profile. So this is something I've talked about at length, I think, just to simplify it for retail, because that's the most simple way of looking at it for me. The market is either in a state of rest or a state of motion at all times. That's it. There's only two options. I prefer to trade the market when it's in a state of motion. And the best way for me to gauge that is like overlapping areas of value, if you're somebody that's into volume profiling. But if the market is not overlapping any value from yesterday or the day before, it's a pretty good indication that it's in motion. There's larger players making decisions. They're moving the market, and those are the times that I want to engage, when it is moving. That's how you catch trends. And I think it gives retail the best chance of success. I use tools like the opening range to be able to gauge, like, okay, are we potentially moving out of this, other areas of consolidation, just drawing simple boxes around those and being patient. But that's the key, right? If that's the way you're going to trade, you've got to wait. You don't really have a choice. Otherwise, you're forcing these trades in the middle of a consolidation zone, which is essentially a flipping a coin for the S&P.
Right.
The price could break either way. So I keep that in my head at all times. There's one or two moves every session. Sometimes if I miss it, then there's nothing to do. I missed it. I just have to wait for the next day. So say you missed the opening range breakout to the higher low. You didn't like the setup. There's something in the options market that wasn't making sense. And I just get trigger shy and don't take this. Happened to me yesterday. Just get a little bit shy and don't take it. Well, then you have to mentally accept the fact it's over. You missed it. That's the move for the day. Come back tomorrow and play again. That's just the way I see it. And I think if you look at the market that way, it naturally leads to less trading. And I didn't actually start getting, I guess I don't want to sound full of myself, but I didn't start getting like good at this game or actually making money until I quit trading so much. So for me, I know it sounds ironic.
It sounds really wise, to tell you the truth.
Yeah, it's really, I try to wait, like your buddy said, I try to sit and wait patiently to hit that one or two setups for the day. That's pretty much all I'm doing. I still would consider myself a day trader. It just doesn't mean I'm
trading every day. Now, one of the things you mentioned there is options. And I've seen and watched you evolve where you've focused more and more on zero DTE, 0 days to expiry options. Do you think that they're playing a more important role in the kind of analyzing markets movements for day traders, and how are you using them and how are you incorporating them into your process?
Yeah, 100%. I do think they're incredibly influential right now. I wish that wasn't the case. I'll admit I'm tired of getting roasted about this and being told from all the quants that I'm an idiot. But when you watch this day after day after day, I still believe that the zero DTE action is increasing. There's really no evidence to say that the volumes are dying. And that's really what this is about. It's about volume, right? We've known how incredibly influential options have been, prior, let's say around the pandemic time, around the COVID crash. from there on out, options have really sort of changed the landscape. We all know volumes in the options market have hit levels that, I don't think any one of us anticipated it would get this crazy. You have more movement in the option than you do the underlying shares. It's bananas, or I should say volume. I'm sorry, not movement. But anyways, I don't see that fading yet in the zero DTE markets. The only thing we're seeing is that it's increasing and they're becoming more influential. And yes, it's easy to get sort of sucked down this rabbit hole that it's some nefarious thing that Wall Street is doing. I don't necessarily believe that at all. It's simply a new product that has actual measurable impacts on price just due to the nature of dealer hedging.
Right.
So as the volumes increase, then the dealer hedging is going to increase too, which is naturally going to have an influence on price. And it's the same way that I just said that, each session really only has one or two moves maximum in it, good rotations. It's kind of the same way with the zero DTE market in terms of what we've been seeing so far in 2023. And this is one of the things we've studied quite a bit at Traderade, because we do think it's providing an actual measurable edge for retail. You're getting these clusters of puts and call walls every single day. They're in a different place, but somewhat close to price. And leaning against those walls has been my favorite strategy for the year. It's completely changed the way that I've traded. In fact, so much so that I had to include additional information for people that, have previously watched my videos about how I trade. I had to include new stuff to say, this is a big change for me, but it's one that I can't ignore. And I think anyone that wants longevity in the market has to take new developments seriously, just like they don't last forever, right? The SPACs is a great example. Who wasn't trading SPACs during SPAC mania a couple few years ago? If you weren't, you were a moron. That was the easiest money on the planet. A lot of these things you could load up at NAV and just wait for them to pop. But that fad died, right? Zero DTEs, in my opinion, is very much the same. It is the hot thing right now. Will it be forever? I have no idea. It'll probably be replaced by 1 hour to expiration options eventually, or something insane like that. But for now, the impact is very measurable in terms of watching it being a leading indicator. And this is where most people disagree with me. They don't think that the zero DTE activity is a leading indicator because the dealer hedging happens almost immediately. And I agree with that, right? If a dealer is going to go out and they're going to sell you 10,000 SPX calls, they're hedging that almost instantaneously on the long side, right? In case somebody exercises those. Everyone knows how this basic dealer hedging works. The problem that a lot of the quants don't account for when they say it's not a leading indicator and there's no edge here, in my opinion, they're missing the pile-on effect. And I don't really have a good technical term for this, right? I just call it pile-on, because that's what we see. If all of a sudden I see somebody come into the market and they're establishing a massive wall, like you have a very aggressive call seller on the zero DTE side, they're selling these to open. They're establishing a very large wall up at that point and continuing to sell into those things. We know what they're having to do to hedge out those positions. And often you see price approach one of those walls and struggle to get through. In 2023, my go-to trade for, just in case anyone's curious, I've been leaning against those, because typically they hold, right? If everybody is hedged for Armageddon, let's say it's on the put side, we all know it's very unlikely for Armageddon to happen, right? If everyone's positioned the same way, everyone's in puts, it's much harder for price to continue to go down. So leaning against those walls has been super instrumental just for my trading this year. I'm waiting for it to break. I'm waiting for it to die. I'm waiting for the volumes to dry up on zero DTE so we can quit talking about this. However, for now, the volumes are still astronomical. There is a lot of money flowing into these markets every day, and I think they're impacting price and providing an edge to retail who's willing to look and take it seriously.
Do you think that there's institutions, like you insinuated that they were selling calls in that example, and they were
yeah, there's some new things with this, some new visualization tools. And I recently was honored to be able to pilot one for a company that was releasing their website. I believe actually they just went live this week, but they have classified volume. So it's just a different way of looking at the volume rather than like the naive Gex models. There are some new attempts to be able to see what was bought and sold.
Okay.
And thus far, what I'm seeing is it's pretty darn good. I've enjoyed being able to see that because I think it's provided a little bit of an extra edge, especially if you see the dealer sitting at one level and they're just selling calls, selling calls, selling calls. That's a directional bet. They're willing to do that, right? Not only are they hedged, but they probably also in their heads are thinking price isn't going to go that much higher than here. Otherwise, why would you take that kind of risk? So most of the time, and part of this is just, been tracking the stats, tracking the data. How often do these things hold? The majority of the time, the walls that are built on either end hold, and price sort of bounces between them very often. So that's to answer your question. How have I been utilizing it? It's changed everything for me just in terms of how I trade ES in terms of this, typically a more opening range, momentum type trader, like I mentioned earlier with breakouts. It's also been extremely helpful just to know when maybe it's a sensible time to get out of a position. Say you're short and you see, your shorts are doing great. You see price run down to one of these large put walls. That's a great place to get out of my position, because it's likely that additional downside is going to, be pretty sparse in that scenario. So it's providing a little bit of clues for us on either side. Is it the only thing that we should look at? No. But given where the volume's at, I think it's incredibly influential right now. And it's been providing a great edge, at least for us. Yes, we talk about it a lot at Traderade because it matters. Right. And until it doesn't matter, I see no reason not to use it.
Completely agree. Okay, so you've mentioned your favorite setups, and I was wondering, are those favorite setups the same for the long and short side, or do you trade the short in a different manner?
Well, okay, I got to answer this in two ways. Yes, if we're building on what we were just talking about leaning into the 0 DTE walls, yes. And in that example, the trade is the same in either direction. The call walls and put walls both tend to hold about the same. However, markets are inherently bullish. So I tend to be more aggressive when it's on the call side, because there's been a few times this year that just make for really wild days where those really large call sellers, like sold to open type sellers in there, they get run over. And that's when price really takes off. If one of those walls doesn't hold, it's been a great clue this year so far for a bullish trend day. I do tend to, just in general, even 0 DTEs aside, I would always advocate that position sizing, at least for me, is going to be larger on the bull side, just because markets are inherently bullish. There's always money flowing into them due to the nature of passive investing and people, continuing to contribute to the retirements. It's, over time that stuff matters. So my sizing is always larger on the bull side. That's just a personal thing for me. It doesn't matter if we're in a bear market. If I'm taking day trades, those moves tend to be a lot more violent to the upside as well, especially in a bear market. Yeah. So I tend to favor bigger positioning on the long side, and I take things a lot easier on the short side. That's just me.
Okay, so now I got a couple of clips here I'm going to play. We'll start with Nick Colas, who worked for Steve Cohen, and he was on the compound, and he was talking about Steve-isms. Let's start with this first one.
Don't make this game harder than it has to be.
Yeah, this was something he would always tell people whose pad was blowing up on a given day, because about once every 2 or 3 months, somebody would be having a terrible day. And Steve would kind of wander over on 10 o'clock after the open and kind of look at the guy's pad. And he would,
by the way, how terrifying is that if you work there and he's wandering?
Is that like Darth Vader?
I had to add a little bit of.
I love it.
Wandering behind you.
No, because at that point you already think you're going to be fired. So
yeah, you've already had the conversation with your wife that we might not be in Turks and Caicos next month.
Yeah, TCI's out.
Yes. Okay.
All
right.
LBI's in.
Okay.
So he would walk by and it would just sort of sit down, and and this was one of the days where the room was absolutely quiet. Everybody wanted to hear what Steve was going to tell this person, and he would always say,
I'm scared. I don't even work there.
He would just look at them
and
say, you're making this so much harder than it has to be.
Yeah.
Because that is invariably what gets a trader in trouble. Second and third and fourth order thinking, instead of sticking to the basic rules. If you put it in a position for a reason, it doesn't work, get out. If it's not trading right, get out. If it's working, add. This is something Ari Kiev, the shrink that worked for Steve for many years and wrote several books about this, would always impress upon us. And the most important thing is you're listening to your intuition. If your intuition is saying something's wrong, listen to that.
So if a stock's not working, just Get rid of it.
Yeah. This is just trading. This is
not investing.
Trading. This is not investing.
Right. They were not there to invest. They were there to trade.
Right. The goal was to make money every single day. And what Steve was trying to say is there are simple rules to avoid getting in trouble. You might not make a ton, but the first goal is don't lose a ton. And what he was saying is clean off this pad, get it off, get everything off the sheet.
So I was wondering if you had a kind of similar thought process in the comments. And before I do this, I'll say one of the things is everyone kind of assumes that trading is different for intraday or day traders or swing traders to investors. And I would argue that it's actually more alike than we think. The time frames are just different. And to me, this sounds very much like George Soros when he used to get into trouble and have a bad streak. He used to phone up Goldman Sachs and fax him his portfolio on a Friday afternoon. This shows you how old it is. He'd fax them and say, give me a price on everything. Like, I'm going to cover my shorts. I'm going to cover my longs. And then he would just come back on Monday with a fresh, clean pad, as Nick calls it, and start making his positions again. And so I think this is so important that people don't understand how kind of debilitating getting into a negative time, mind frame can be. And you just have to find a way to reset it.
No, 100%. Yeah, I think there were some great things said in there, right? There's a good classic principles in there. And these are some things that I've talked about. I recently put out a video on our website about this concept. For the difference with day traders and swing traders or investors, to me, comes down to the concept of visualization of the trade, because I swing trade as well. I invest in as well. I put out a lot of content about how I manage those 3 different accounts for 3 different things. But there's some really strong concepts I think that we can take from all of them, but the one I don't think we have time for that.
Just keep going. It's okay. We're going to go over.
Okay. Well, so the big thing that I think is, like, you put on an investment or a longer term swing trade, there are multiple factors involved in that decision. Usually valuation tends to be one of them as well, right? I'm not as concerned about the chart if I think I found a good company that has a bright future and there's, they're growing and there's reason to hold this. That's not necessarily the same thought process we're using as day traders. A lot of time for me, I think it's as simple as a quick visualization of what do I anticipate is going to happen here in the next 10 minutes, and can I take advantage of that? Like, for example, if you got indicators firing off that you got exhaustion from the sellers, things are really knifed down, you finally see buyers step back in, right? That's a visualization that happens. I think if I long here, my thesis for this position is that it's going to return to this key level. Maybe it's the point of control or some sort of big iceberg that they put in intraday. You visualize that before you take it, which to me is a little bit different. I'll be honest, I don't do that investing.
Right.
And I don't do that really with swing trading. So I do think there's a little difference, because
so what happens if
taking the position are different.
Right. But what happens?
No, that's a great follow-up question. You get the hell out.
Okay.
If what you visualized is not happening immediately, you get out, because your thesis for the trade was that visualization. I anticipate coming down, tagging the 200 daily moving average and finding buyers step in and price gets pushed back up. For example, let's say that's your thesis. You're 10 minutes into that and it's not happening, just flatten the trade. You were wrong, right? So you do have to do the same process, sort of like you were saying earlier. There are similarities. It is sort of the same process, developing a thesis. But to me, I think there's a lot more of a visual component for day traders than there is for swing trading investing. Does that make sense?
Yeah, it does. And in terms of, you've seen and watched a lot of people on your Discord. You've also had all your own personal experience. What do you think holds people back from being able to rip that Band-Aid off?
I mean, that's such a great question, Kev. Honestly, I feel like if somebody actually knew the answer to that, they'd probably be a very wealthy person.
Okay.
It's got to be one of the oldest struggles in the market.
I think
you're right.
It's the biggest struggle.
I see it all the time.
Yeah.
People hold losers way longer than their runners, and that math just does not check out over time. Right. And I wish that people would understand that, right? Like, that's the hard part that I struggle with. I'm like, it's basic math here. That's not a sustainable approach. Even if you're martingaling that position and hoping this thing comes back on you in the long run, everyone knows that's absolutely devastating. Losers average losers.
You're right.
It's just
Like
the sooner people accept that, and I think it's really a retail thing.
Oh no, I disagree with you completely. I think you've said,
Really?
yeah, I think you said stuff like this the last time you were on. I think you think too much of the institutional guys. They just make the same errors with more zeros. Okay,
that might be fair.
Okay, let's go on to Mark Fisher, who's one of my idols here in terms of trading.
The thing about trading is you have to become the house where you have to bet small enough so that if you go through a bad streak, you're not going to lose all your chips. But you have to bet big enough that it matters, right?
That's the hard part.
You have to manage your chip stack, right? And people don't do that.
So I thought that was interesting because it is a fine line between trading small enough that you don't get yourself into trouble where you can take the loss easier. But then the trouble is if you trade too small, it becomes almost not worth it.
Yeah, I can't say that I'm the best role model with this because I'll tell you why. I'm a huge believer in trading with like a core position, runner position mentality. And I know not everybody likes that.
Well, why don't you explain to people what that means? Because some people won't know what that means.
Yeah. So for me, that means my largest position size is first. When I enter a position, that's my biggest size. That also makes it really easy to flatten out real darn quick if you're wrong, right? So your finger's sort of on the trigger. We just talked about that visualization aspect. You got to be willing to get rid of it. But for me, this is the way that I trade. I tend to hit it very hard at the beginning and then peel off as I go. And there's a reason for that. And it goes back to one of the first things we talked about on this episode today. It keeps me as a retail trader from overtrading. And it still allows me to capture some of my thesis in a much smaller position. So take ES, for example. Maybe I'll take a trade setup that I absolutely love, and I think we're about to get 5 to 10 points out of it. I'll hit it very, very hard on the initial entry and then take 75 to 80% of that off and ride the rest of it much smaller. That helps me walk away for the day. And I know that it sort of stands in direct contrast to what Mark Fisher's quote was just being there. Ideally, if you're on the right side of price, you want to be adding more. You want to take advantage of that. For me, I don't know why, Kevin. I wish I did, but it's worked far better for me to not do that. And I think the real thing, the best guess, if I had to guess why, it keeps me from doing anything else, right? So say I'm long and I long a bunch of contracts on what I anticipated to happen in the next 5 minutes. That was my thesis. I was correct for that thesis. But that 5 minutes is over, and that price that I anticipated we'd return to has now been reached. Now what? Now it's almost as if you need a fresh thesis now because what you were thinking was going to happen is done. So I cut it down to next to nothing, move your stops to break even, and just physically walk away. Get away from the computer. Often those runners turn into an extremely valuable position by letting them go. And in many cases for myself, it leads to not trading for several days. I'll be sitting in a position of runners that essentially turns into a small swing trade. I'm still making money. But I'm not doing anything, and it keeps me from, making stupid decisions because I really believe we're often our own worst enemies. That's sure. One of the reason that retail struggles, I think, with holding winners long is because they get excited. They see those are different chemicals in the brain. When you're in a losing position, there are some different types of chemicals firing in your brain than when you're in a winning position. Those winning position makes you want to flatten out and take those profits, So that's one of the reasons I do.
Oh, that's great. And stop saying retail because it's everyone. It's human beings.
I know. I'm sorry. I'm so used to saying that because I am retail. And I know, like being retail.
I know, but it just everyone thinks that these institutions are so great. And trust me, I've seen so many mistakes, so many dumb things done by folks that should know better and do the exact same things. And you're just like, holy smokes, how are you managing billions of dollars and doing this?
Exactly.
And like even Druckenmiller will talk about it. Like, his famous story about when he, in the .com bubble, when he was long and then he sold it and then he watched these two kids making all this money. He couldn't take it anymore. And he bought, I can't remember what the number was, like $5 billion of the .com and within like hours of the high. And he like, no, seriously. And he talks about this and he says, he knew he was making the mistake and he couldn't help himself. It's one of the
tough, man.
Yeah. No, so we're
really
all the same. All humans are the same, whether they're retail, institutional, professional, or non-professional. Everyone suffers from the same things. It's just a question of, how you deal with it. Okay, one more.
But there's also,
sorry, go ahead.
well, I just throw last quick note on that topic though. I think a lot of things that get ignored often while we are talking about retail. The one difference though is the goals I think are different, or at least should be different for retail versus institutional. Like I don't have a desire to trade billions worth of dollars of stuff. I know people will say you're full of it, but it's true. I am a family man, like I have kids, I have a lot of stuff that I do. I really enjoy navigating the markets and I think I'm good at it, but I'm not interested in having that level of stress of holding those Druckenmiller sized positions. I'd rather get in where I know my strengths are, which is what's going to happen in the next 5 to 10 minutes, and then let the rest play out. And sometimes I get lucky and those runners run for days and turn into something meaningful for me. So I think it comes back to goals though. Like what is your goal? Are you trying to supplement your income as a retail trader, or are you trying to size up, like Mark Fisher's quote there, to get to that level where you're moving millions?
Well, that's
everybody's
true. No, you're right.
Everybody's
you're absolutely correct. Okay, one more from Mark, and this one's going to be a little more philosophical.
The hardest thing for a trader to do is risk manage himself. That's why, for myself, when I trade, I don't execute myself. I have someone execute for me. Otherwise, I'd be like this all day.
Well, what does risk management mean? Like to you?
To me?
Yeah.
Number one, making sure where am I getting out if I'm wrong? If I have no idea where I'm getting out, I'm not getting in. Okay. Why am I making the trade? Right. What's the probability of success? Right. How many trades am I making just because I'm bored versus how many trades I'm making because of the real trades? Right. Is everyone else thinking the same way I am? If everyone else is thinking the same way, I'm not doing it.
It sounds like it requires a lot of self-awareness.
Do you find that, does that ever worry you, or do you ever not take a trade because you're worried that everyone else is taking it, or are you so short term it doesn't matter?
Yeah, no, I do struggle with that with my swing trades. The Ozempic narrative is a big example of that one right now that I'm currently struggling with. I love the thesis, but everybody's on the same side of the boat, and I'm starting to think about it from different angles. I'm like, is this really a narrative that I want to jump on, given that how much of it's probably priced in at this point already? Yeah. Also, I'm not entirely sure it is the best thesis in the world, because I believe in America, and here in America, we are not quitters. We are committed to being fat and obese, and you'll have to pry that from our cold dead hands. So it's just an example, but
this Kentucky Fried Chicken bucket away from me when I'm dead. Okay, let's.
Oh, I think the Ozempic bulls are underestimating Americans' ability to just eat right through that pill. Literally, continue to eat on it. I know they say they can't, but I heard the same stuff for gastric bypass back in the 90s, and we're still fat or fatter than ever. So. Stuff like that. When everyone's on the same side of the boat, yeah, it is tough for me.
If I took it, I'd probably make me more hungry. That's what it would happen to me.
I was joking about that earlier on Twitter because somebody put out a bear thesis on Krispy Kreme because of Ozempic.
Come on, really?
Are you kidding me? I'd be double fisting those things if I was on a weight loss pill.
A quick aside, do you know that whenever you hear a lot of actors, when you hear about them trying to put on weight for a role, they'll be like, I tried everything. I tried this. I tried that. I tried this. And eventually it's always like they said, finally, I figured out donuts.
Yeah.
Donuts are the one.
Code.
Like if you want to
Michigan cheat code here.
That's right. Okay. Let's keep listening to Mark.
And you almost have to like psychoanalyze your own actions during the course of the day.
Yeah.
To like catch yourself and say, wait, why am I doing this trade?
Right.
How many years can you do that before either you figure out, okay, I do belong doing this, or it like drives you crazy? Like it would seem like most people are not cut out for that level of self-reflection every day, but it's like required because you're taking risk.
The problem is that with traders, I could usually tell within 6 months whether someone's made an effort, but the problem is that things happen. They get married. Was it the right person? Then they have a child, that whole thing. Then they buy a house. Then someone significant to them, a father, mother passes away, or there's another thing. All these different things impact them in a lot of ways. They won't tell you, that a dog dies. Weird things happen, and it affects people in the way they operate. I can't tell you how many people I've been to that trade with me that I've been to the psychiatrist with.
So, Horse, I can tell you that. Oh, I'm the same way. Listen, I when everything was going great in my life, trading was the easiest thing in the world. And then things go bad, and all of a sudden trading gets extremely difficult. And it shouldn't be that way. And I think people underestimate how much that your environment can affect your trading. And I think Mark, who's listened, he's been in charge of traders for the past 30, 40 years, and he's seen
Yeah.
it all. He goes on to talk about, various things, and you can see he kind of laughed, and he said to he could tell from one of his traders, he says, "When are you getting divorced?" And the guy was like, "How did you know?" He goes, "Like, you're trading like shit." And anyways, I was just
That's
wondering.
one of the reasons I say that's tough for me, though, is I've had the exact opposite experience this year. And not to get too serious with people, I do value my privacy, but this has been the worst year personally of my life. Marriage fell apart, just a lot of things that I did not anticipate, and I've traded through that and well for myself. And this is something I talked about openly in the Discord. I don't understand it.
Okay, so how did you do it?
Other than the fact that I think it's a refuge for my mind, if I'm being honest and vulnerable. This is something that I don't want to make it about men and women, but some of us tend to throw ourselves into work when things aren't going so well.
I got it. Okay.
And I learned that, though, about myself just here, 10 months into the year. I'm like, I did not know that. I did not anticipate this. I felt like I couldn't stop trading because, we have Traderade going. People expect me to post stuff. So I kept trading, even though I probably should have stopped for a period in like January, February. Things were really bad. But it became sort of like a safe place.
Do you think that having your rules established ahead of time helped with that?
Oh, absolutely. Absolutely. Everyone needs to have their own rules for trading. I've posted mine in there, and I think some of them, there's some humor in some of them, but the reality is those rules were developed through many, many sizable losses and lessons learned in the markets over the years. And the thing about having rules, you have to follow them. I've noticed that so much, even in our own Discord, and I love everybody in there. We are all horrifically guilty of having rules and then just not following them. They only work if you stick to them. That's the key.
Oh, that's a great line.
Right?
Yeah, you're absolutely correct. You're absolutely correct.
The rules save me a lot. But yeah, I don't even know how to comment on that last.
No, listen,
it is something that's so strange to me. I don't understand it in myself, but I am aware that, you probably shouldn't be trading if you got a bunch of stuff on your mind. I just think sometimes people are wired differently. And for me, it was like an escape. This is something I'm good at. I enjoy it. I like nerding out over the numbers, and I don't know.
I think
we could speculate.
The other thing is that the fact that it was an escape meant it wasn't an outlet for your emotions. It was a distraction.
No. Trading is a business.
Yeah.
Yes. It's a business, and it will always be a business,
right.
Even if you're retail, right? You need to treat it very seriously, or you're going to get wiped out. You're stepping into the ring with some of the biggest and best players in the world. If you think you're going to extract some points out of the market without, taking it seriously and treating it like a business, you're going to be another statistic, one of those 90% of traders that never make it.
Okay. Well, listen. Thank you for being so honest, open, funny. It's always a pleasure having you on, Horse. Why don't you tell people where they can go find more about Traderade if they want to come and join your community?
Yeah, first place to start would be our website, www.traderade.com. Check us out if you're looking for a place to hang out with like other adults. You don't want all the toxicity of the people using terms like baggers and all the FinTwit stuff. We tried to build a place that has all the tools that we need in one place to make the decisions that we make and learn together, grow together, encourage each other, and really just nerd out about markets. That's what we were looking for, a non-toxic place for adults to hang out that are into trading. Check it out at traderade.com. There is a Discord. There's also just a website version. We put out a lot of content, videos, articles, research. My partners, Mayhem and Aisha, are some of the best minds I've ever had the honor to work with in this business, and routinely put out amazing stuff for longer term people, for the swing trading and the macro picture. And I like that we have it all, in one place. You get the macro, the micro, the fundamentals. So please check us out. Otherwise, people can find me making dumb jokes on Twitter over at Michigandolph is my handle. Deeply regret that now, but that's my Twitter handle. You can find me over there.
Okay. Thanks again, Horse.
Hey, thanks for having me, Kev.
Thanks for tuning into this Market Handle Plus episode. And don't forget that our regular full-length show airs every second weekend. This coming week, I'll be away, but my partner Patrick Ceresna will be joined by Chris McIntosh from Capitalist Exploits to talk all things macro. Until next time, I'm Kevin Muir, and thanks for listening.